This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on June 23rd, 2011, a Thursday. Harold has a travel day tomorrow. We're taping a day early. We will be next week as well. Canada Day is on Friday. Show being taped at 8:44 in the morning Mountain. That's 10:44 Eastern Time. Our radio show runs on AM 640 in Toronto, 630 CHED in Edmonton. If you ever miss a radio show, you can catch us at Harold's website, HESradio.com, HESradio.com. And obviously, you can listen to all the archive shows there. Harold, it was another crazy week. And Greece, obviously, was at the top of the mind of a lot of investors. And we're starting to see some serious problems around the world that they're kicking the can down the road. And ultimately, there is no solution. It would not surprise me at all if somewhere down the line you do see eventually a default by Greece.
Well, I don't see any way that it's not going to happen, to be honest with you, because, again, I just don't believe that there's enough money around in that part of the world to bail out Greece and Spain is just as bad as Greece. So, again, we're going to see a lot of this during the summer. When the markets are thin and situations happen and there's not a lot of traders around, you can see these markets react, to these type of situations. But, again, there's no doubt that Greece is on the verge of bankruptcy, and what will happen is that they probably won't be included in the European Union anymore as far as the euro goes, and they'll have to revert back to their currency. So what that basically means is, you imagine converting your euros back into the Greek currency, but it would be devalued so substantially that the inflation that would be associated would be astronomical. But again, it's not only Greece. We're here in Greece because Greece is the closest to default. And what happens when a country defaults? They don't just wipe it off the face of the earth type of thing. First of all, they lose their credit rating, which Greece is already down to CCC. So again, that's one thing. It means that they can't borrow at favorable rates. In fact, after they go bankrupt and they don't pay their debts, who's going to loan the money anyways? So my heart goes out to the people of Greece. They're starting to riot. Their social services are being cut off, and again, their lifestyle is going to fall substantially. But again, Greece is only the beginning of it, and there's several other countries in Europe that are going to follow suit, but don't think that the United States is not right behind them, and so is England. So again, what we're going to see over the next 5 to 10 years, most of us have never even dreamed that this was possible. But again, we've got countries going bankrupt and currencies changing, and again, it's very possible that the euro may not be here in the next 2 years. The markets are down today. As we're taping the show on Thursday, gold's down $30, silver's down about $1.25, platinum's down 40, and palladium's down 17, and that's all because of the oil market, believe it or not. The very bullish oil market is falling today because of intervention. That means that the International Energy Association, known as the IAE, is releasing 60 million barrels of oil over the next few weeks. And basically, they're doing this because they feel that the price of oil is too high. Again, it's just another example of socialism in the markets. These are supposed to be free markets. We're extremely bullish on oil, as are a lot of other traders in the market. And again, even though these are short-term situations, and it doesn't affect the overall momentum of the market because, again, the trend is always your friend, and the trend for oil is substantially higher. There's no doubt in my mind that within the next year to year and a half, we're going to see $150 to $200 oil because Saudi Arabia does not have the oil that they said that they've got. And basically, the demand in China and in India is picking up substantially. And again, this is only the third time in history that this has happened, that they've actually released this type of oil. And again, most of the time that is used for wartime situations. So I don't think that this was a very smart move, and I really don't believe that the timing was indicative of doing this type of thing. But again, it's a short-term situation. It will bring the price of oil down to $90 today and possibly $85 next week, and then I would be a major buyer of oil. And again, long-term, I believe that oil will be $150 to $200 market. Again, the downturn in the market today, again, is a result of a thin market, market and the oil market falling and the U.S. dollar rallying. So basically, oil's down $4 to $5 today. It's sitting just above 90. The U.S. dollar is sitting at 75.68. But there's no doubt in my mind that the U.S. dollar will be down to about 71.50 by the end of the year. There's no way that we're turning bullish on the U.S. dollar. There's just way too many U.S. dollars out there. And again, if you watched the Federal Reserve Chairman Bernanke this week talking, there's no doubt if you understand what he's saying, he's preparing us for high inflation. And there's no doubt about it. In fact, everybody else knows that there's inflation, and the fact is that inflation in the United States is probably sitting at about 10%, but the government is admitting to 3.6%. So, again, I believe that we are heading into the most unbelievable times that we have ever experienced. I've been through the inflationary markets of the 70s and early 80s, and I've been through those, as have most of us. Most of us remember the times when we had 20% interest rates, try to sell or buy a home or get a mortgage with 20% interest rates. But those days are coming again, and they're not that far behind us. So again, with inflation, with high oil prices, even though you bring down the price of oil temporarily, it doesn't affect the overall market situation. Again, it's only on a short-term basis. I would be a buyer of gold, silver, and oil and diamonds at this particular point. We're going to head into the biggest bull markets that we have ever seen. We're in a massive bull market in gold and silver anyways. Again, we saw the pullback this year when silver went from 50 down to 32, headed back to about the 37, 38 level. It's building a very strong base at $35, $36 right now. And again, we believe that this is a seasonal trade that happens almost every single year. Last year, the market bottomed out and silver went from $17 to $30 in just 90 days. And we anticipate similar type of price movements going into the latter part of this year. These markets tend to fall off during the summer and rally again in the fall and winter. And I think this year will be very similar to that, except for one possible scenario, that with Greece on the verge of going under, if that does happen during the summertime, and there's very few traders around, these markets can react and these markets could go parabolic. So again, if you are in the gold and silver market, and we've always recommended that you want to own it physically, you don't want to trade the futures market. You're going to lose all of your money by trading in and out of the market. You want to be buyers and holders of physical metal. And you should never be out of the marketplace because, again, these markets are capable of exploding and going parabolic, and that could happen in July of this month. We could literally, while the markets are dead and trading in their range, you could literally see gold and silver take off if Greece goes under during the summer and catches the traders, unaware type of thing. So all in all, if you're in hard assets, gold, silver, and diamonds, the outlook looks very, very bright. If you're sitting in stocks, I would be very concerned. If you're sitting in paper gold and silver, I would be concerned about that also. You want to be in the actual physical metal, and you want to hold onto that metal. You want to be in tangible investments that you can hold in your hands. And there's no doubt as inflation comes that these markets are going to skyrocket. In 1979 and 80, gold and silver hit their highs, and that's when interest rates were rising. And I anticipate that we're going to see a similar situation. I get many, many, many phone calls and emails, from clients and listeners all over the world asking, questions about the precious metals and diamond markets. And the biggest question that we get is that, for example, being in Canada and being Canadians, that we're converting Canadian dollars to buy American precious metals. Gold and silver are priced in U.S. dollars and traded in New York. So basically the reason that we're buying gold and silver at this time is because the U.S. dollar is going down. And when the U.S. dollar goes down, precious metals go up. So what's going to happen if you sell your precious metals prematurely and have to convert that money back to Canadian, that's going to cut into your profits because the Canadian dollar is worth more than the U.S. dollar is at this point. My feeling is that you want to be in precious metals for at least the next 5 years. The reason I'm saying that is that the Federal Reserve will not raise interest rates for probably the next 2 years. They're going to keep interest rates as close to zero as possible to try to keep the recovery happening in the United States, which, by the way, is not happening. So basically, by keeping interest rates low for the next 2 years and keeping them at zero, that tells me that we're going to see the U.S. dollar not only fall to 71.50, which it could do this year, but fall well below that, which again would increase the price of other foreign currencies, including the Canadian dollar. But our exit strategy, I think, is very defined in the fact that we know that we have inflation not only in the United States and Canada, but worldwide. And that will continue as food and oil prices go substantially higher. What eventually will happen is that interest rates will rise, and they're going to rise in the United States. So I do not believe that the U.S. dollar is going to disintegrate and not be here anymore. It's going to go through its trials and tribulations, and there's no doubt in my mind that the U.S. dollar is going to fall to tremendous lows that will eventually push gold to 5,000 and silver to 200. But they will get their act together here in the States, and things will correct itself, and they will raise interest rates substantially. And they will raise interest rates more than likely to 15 or 20%. And it was when we hit 20% interest rates in the United States that gold topped out at 850 and silver topped out at 50. So I do believe very strongly that that's our exit strategy. We'll run these markets for the next 5 years. We'll make as much money as we can in gold and silver, but when they start to raise interest rates up to 15, 20%, that's when we will liquidate our gold and silver, and that's when we'll convert our money back into Canadian dollars because we'll be profitable heavily at that point. The other thing is that isn't it going to be nice to make all of your money in gold and silver and diamonds for the next 5 to 10 years and to be able to put your money in a bank and pick up 20%? I believe that's going to happen, and that's what we should plan for. And again, if that scenario does work out, we're going to be in phenomenal shape. Don't forget, 90% of the money is made by 10% of the people, and Randy and I only want for our Canadian clients to be in that 10%. Get the newsletter this week. It's one of the best newsletters we've ever put out. Randy did a phenomenal job. And again, there's so many important articles in the newsletter this week that the show just is not long enough to cover it all. But again, the newsletter is perfectly laid out. There's so much news that came out on Greece and the foreign currency markets and everything. But boy, oh boy, is there news on diamonds in this. There had to be 10 articles that came out on investment diamonds this week alone. So you definitely want to get the newsletter. Randy, you did a phenomenal job this week.
Thank you. Yes, we put it together in short order and lots of good information, even though it was a short weekend. I agree. When we talk about diamonds a little later in the show, people are going to be blown away as to some of the facts and figures that we have. To invest in precious metals, there's only one company that Harold recommends that you deal with. That is a Canadian company, Worldwide Precious Metals. Their website is www.pmc.com, www.pmc.com. You can reach them by calling 1-866-623-2002. Trusted Canadian company in business for over a decade. They only deal in physical precious metals, delivered or stored, no paper promises. And obviously the representatives are very knowledgeable in these specialized markets. And we've said this for a long time. That's who you want to deal with, people that live this every day, precious metals. That's their life. Not somebody who's dabbling in real estate and stocks and bonds and insurance. Somebody who is only in this market, and that's what they do. They have programs available for everyone from the very conservative to the more aggressive investor. And obviously, they can step you through how you can be involved in these markets. Now's the time, as we've seen for many years and talked about on past shows, summer's the time to add to a position or start a position. As we get to fall, things could take off, and we believe it's going to happen as it did last year. In fact, Bill Gross from PIMCO, the biggest bond fund manager around, believes that quantitative easing is going to be announced in August when the Fed goes to Wyoming, Jackson Hole, Wyoming. He believes that we could have QE3 at that time. To invest in precious metals, the telephone number 1-866-623-2002, the website www.pmc.com. As Harold touched on off the top of the show, Greece obviously was a major concern this week. And what are people in Greece doing as a result of the crisis there? Greece savers are rushing for gold. Greek citizens are emptying saving accounts and buying gold as they brace themselves for the possibility of a sovereign default and a run on the banks. Pledges by the socialist Prime Minister Papandreou that his government would save the country have been widely discounted by the public. However, Parliament gave him a vote of confidence on Tuesday night, and obviously that still has not calmed nerves. Sales of gold coins have soared as savers seek a safe and fungible source of value. When the global financial crisis started, our sales of coins to investors overtook bullion for the first time, says Harry Krenakis, and he's a Greek precious metals trader. He said that